Assalamu alaikum. My name is Jumaila and I am Deputy Director Education and Training at ICAP. I welcome all the participants in this webinar on digitizing transactions and FinTech ecosystem. Let's begin the webinar with the recitation from the Holy Quran.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الرحمن علم القرآن خلق الإنسان علمه البيان الشمس والقمر بحسبان والنجم والشجر يسجدان والسماء رفعها ووضع الميزان ألا تطغوا في الميزان وأقيموا الوزن بالقسط ولا تخسروا الميزان والأرض وضعها للأنام فيها فاكهة والنخل ذات الأكمام والحب ذو العصف والريحان فبأي آلاء ربكما تكذبان خلق الإنسان من صلصال كالفخار وخلق الجان من مارج من نار فبأي آلاء ربكما تكذبان رب المشرقين ورب المغربين فبأي آلاء ربكما تكذبان صدق الله خالقنا المولانا العلي العظيم.
The Digital Assurance and Accounting Board was established by the Council in 2018 with the objective to serve the public interest, to contribute policy recommendations, and to provide support towards embedding technology-based solutions in accounting, assurance, and other businesses. The board has representation from all relevant stakeholders, including accountants in profession, industry, academia, IT, digitization experts, both from public and private sectors. One of the board's aims is to ensure most efficient and effective response towards the emerging technologies within the accounting and auditing profession, including technology and its impact on audit, digital disruptions, finance, and impact on business decisions, and how AI is impacting audit function within the profession. Since its inception, under the leadership of the chairman of the board, Mr. Rana Muhammad Usman Khan, the board has initiated various activities to create awareness amongst the stakeholders. This webinar is amongst such initiatives. Let's begin our webinar now. I would like to invite President ICAP, Mr. Iftikhar Taj. Iftikhar Saab is a fellow member of ICAP and has been serving as an elected council member since 2017. He has also served as vice president for the term 2018-19. He has been playing a vital role in several ICAP committees, including Investigation Committee, Marketing Committee, IT Committee, Committee on Fiscal Laws, Education and Training Committee, Building Committee, Professional Accountants in Business Committee, and Practicing Members Committee, including boards like Digital Assurance and Accounting Board. He is also a technical advisor on professional accountants in Business Committee of the International Federation of Accountants. Currently, he's working as Director Governance and Strategy at Crow Hussain Chaudhry & Co. Mr. Iftikhar Taj is a governance practitioner with over 30 years of industry experience in financial services, fast-moving consumer goods, information technology, textile, media, advertising, and bulk drug manufacturing sectors in various roles. Iftikhar Sahab, you're requested now to please open the webinar.
Thank you, Shmaila. Thank you very much, but it's very lengthy introduction. I was not expecting that. And I'm grateful to Rana Usman as well, who invited me to his webinar. And I welcome all the participants, particularly from across the time zones. I know it's a great thing that they have decided to participate in our webinar. I'm grateful and I thank them. FinTech. FinTech is very, very important. I mean, financial services and merger of both of those. You cannot grow beyond a certain point unless and until technology. And that's what is going to happen. You know, long back we were listening, okay, there will be telephone booths on the road. There will be mobile phones. And anybody can go and buy the same and use the mobile phone. And then there were smartphones. We are using those phones for many purposes. Technology has brought us to the level where we are doing even banking transaction and other financial services transactions without engaging any. And that's a great thing. 20 years back, 30 years back, we used to listen, okay, that is impossible. Today we cannot say, this is impossible, that is impossible. We only listen, okay, how this is being done, how this can be done. But we never listen that this is impossible. FinTech is not a new phenomenon in Pakistan as well. There are lot many startups and there are lot many services. Those are being offered by the financial services companies in Pakistan. I remember even 20 years back, I was analyzing banking transactions and the technology behind it in Japan. And I was very proud that Pakistani banking system is far system. We are not behind any other country, but we have certain challenges with this FinTech as well. Data security, cyber security, governance of the transactions, and all those things. I am sure those are being touched on today. And our participants and all the members who are joining us today at the webinar, or they will be watching this video later on, they will learn a lot. I would request all the participants to please focus on one area as well, which is what is the changing role expected from auditors and accountants, CFOs of their companies, of different companies, how they are going to be impacted by this FinTech. Yes, there is a lot of volume of transactions. Yes, there will be multiple size of businesses as compared to other methods of transactions. But how this is going to banking profession, assurance services, and chief financial officer responsibilities, how all that, and that's very, very important for us. Rana Usman Khan for wonderful leadership he has provided through Digital Board. And I know you guys are doing a lot. I would request only that after the seminar, please create some knowledge document whereby we can knowledge that we are gathering from this webinar, and we can share with our participants and members of ICAP. With that, thank you very much. I hand over the control to Shmaila. Shmaila, thank you.
Thank you, President Sir. This webinar is brought in collaboration with Pakistan FinTech Association. We are really grateful to them to be on board with us. I would now like to invite the moderator for the webinar, Ms. Halima Iqbal. She is the CEO and founder at Udan. Udan has recently been honored to receive seed funding for gender-inclusive fintech. Halima is a former investment banker and consultant with 8 years of experience. She moved back to Pakistan with the drive to make finance inclusive and simple for the undeserved millions. She is currently serving as member of Pakistan FinTech Association and looking after their communication protocol. Halima, I would request you to please take over from here.
Thank you, Shamila, for the introduction. As Shamila mentioned, my name is Halima Iqbal. I'm the CEO and founder of Uran, a women-first financial technology platform and a core member of Pakistan FinTech Association. I will be the moderator today, and I would like to start with introducing Pakistan FinTech Association a little bit. PFA is a collective voice of the Pakistan's fintech ecosystem, working in collaboration with industry experts, regulators, and financial institutions to provide a fully inclusive environment in order to support fintech growth and empower Pakistan's economy. It is our pleasure today to partner with ICAP and DAB for this webinar. The agenda for today's webinar is to provide the audience with 3 perspectives around the fintech ecosystem. The first presentation represents the regulatory perspective. Syed Suhail Jawad Saab, Director of Digital Financial Services at State Bank of Pakistan, will be the presenter, followed by an international perspective being presented by Rachel Freeman, Chief Growth Officer of Time. The local perspective will then be presented by Kasif Shahid, CEO and founder of Finja. Fawad Abdul Qadir, a core member of PFA and head of digital financial services at NIFT, will then present use cases of digital financial services in Pakistan before Rana Mohammad Usman Khan Sahab, chairman of DAB, presents his closing remarks. Without further delay, it is my pleasure today to invite Suhail Jawad Saab to present. As the Director of Payment Systems Department of State Bank of Pakistan, Suhail Jawad Saab is responsible for creating and developing strategies and regulatory policies around the technology innovation in the digital financial services to better manage risks, enhance efficiencies, and strengthen competitiveness in the financial and payment services sector. Without further delay, Suhail Jawad Saab, over to you for the presentation.
Bismillahirrahmanirrahim. Thank you, Halima. Thank you for your kind words. Rana Muhammad Usman Khan Saab, Iftikhar Taj Saab, fellow panelists, and all participants, Assalamu alaikum. Good evening, good morning, wherever you are. So before I start my presentation, I'll just like to say a few words, and just let me share the screen with you, and I hope that it's visible now. Okay. So I would today like to talk about some of the regulatory interventions that State Bank has done in recent years to promote fintechs, the role of fintechs in the area of digital payments. And as you might all know that in the area of fintechs, digital payments is probably the most prevalent use case in which investment is being done and use cases are being rolled out. So I would like to talk about some of the steps that we've taken, and then I'll talk about what we are planning for the future. And then finally, like Iftikhar Saab said, I would like to dwell a little bit on the changing role of auditors in this new space. Now, before I move to the actual steps, I'll just like to show you the current numbers on where we stand with regards to certain parameters in the digital financial space, especially in payments. So you can see that since FY 2018, the number of internet banking users have grown, and so has the number of internet banking transactions, both the number and the volume and the value. And you can see that the value has almost grown by, I think, more than a factor of 4, and similarly, the number of transactions have grown by more than a factor of 3 within the past 4 years. And similarly, on the right, you can see the change in the number of, or the growth in the number of mobile banking users and mobile banking transactions. And you can see that there is a clear indication in the increasing number of transactions using mobile phone banking. I think one of the reasons is that not only the banks but the private sector and a number of fintechs are now innovating and coming up with new types of apps and new types of payment services. Now, if you look at other use cases like the e-commerce merchants, you will see that both the merchants and the transactions have again grown quite steadily during the past few years, and especially the last year was the year of the COVID pandemic. So you can see that the number and the amounts have really grown in this space as well. Another very interesting use case is the POS terminals or card present transactions, which happens on shops and merchants. And you can see that despite COVID and despite closures, we are seeing that the number of POS terminals have been increasing and the number of POS transactions have been increasing as well, showing that investment is happening in this area as well. Now, what is exactly happening, and what did we do to make this happen? So I think I'll just like to mention that in 2019, 1st November 2019 is the exact date when we formally launched the National Payment System Strategy. And it was a time when the president of the World Bank was visiting Pakistan, and he came to State Bank, and on that occasion, we issued this strategy. We worked with World Bank and many other international and national stakeholders on identifying the areas of intervention and devising a way forward in this. So you can see that there are actually 6 pillars of this strategy, and I think the most important is the payments infrastructure. That we, in the strategy, we have decided that we will look at what type of payment infrastructure we have, what gaps are there, and how we are going to address those gaps, and what new structures we will bring into the space of digital payments. Similarly, we also said that we'll be focusing on retail market, and by retail, it's all private sector transactions, not just the merchants and not just the e-commerce, but also the B2B transactions. And in that space, you will see that we are also relying a lot on the fintechs to play their role. Similarly, government payments is another very important use case. Government being the largest player in the economy, it's very important that we digitize their G2P transactions, their disbursements, and all other types of their collections, which we have been doing for the past few years. And you must have noticed that the amount of tax collection of FBR, digital tax collection, has really gone up during the past 2-3 years. Similarly, we also said that we'll work on the remittance market, which is both cross-border and domestic remittances, facilitating the transfer of funds from one person to the other. And other 2 very important aspects relating to State Bank's own working is we will improve our legal and regulatory framework, mostly with the view of enabling new fintechs, making them, giving them an opportunity to come and play a role in the financial sector of Pakistan. And then finally, and most importantly, I think it's the oversight, how we improve our oversight function. So it's the function by virtue of which the State Bank remains in touch with the market players, keeps its doors open, engage in continuous conversations. And the idea is to keep an eye on what's happening in the market and intervene wherever necessary to take corrective actions or to work as a some of the regulatory interventions that we have done during the past few years. So you can see that I think the main change started happening in 2007 when our Payment Systems and Electronic Fund Transfers Act was approved by the Parliament, was enacted by the Parliament. In 2008, we launched our real-time gross settlement system, which is a large value system, which is used for institutional fund transfers and also includes other securities related transactions. It also settles transactions from NEFT and OneLink and other large players. And as a result of that, today, RTGS processes around transactions worth rupees, on the average, rupees 1.5 trillion daily. So that's a huge amount, and that's why it's a very systemically important payment systems for us. Similarly, branchless banking was launched around the same time, and you can see that we now have world-renowned brands like EasyPaisa and Mobilink, JazzCash, and others playing a very important role in financial inclusion in Pakistan. In 2012, also we launched the IBAN, which is the International Bank Account Number. And Pakistan is one of those few countries where you can actually use an IBAN to transfer funds. It makes fund transfers easier by reducing transcriptancy and other errors. So this is another thing that we did. Now we moved into 2013 and 14, and that's the time when there were changes happening globally as well. PSD2 was being launched, and the faster payments were being launched, and there was a growing realization among regulators of the world that the private sector, non-banking entities, especially fintechs, need to play a more important role. So we also started working on developing our rules for payment system operators and service providers that were launched in 2014. And the idea was to enable private sector entities to come and establish their gateways, mostly in the areas of e-commerce and other merchant activities. As a result, in around 2016, we saw non-bank acquiring that was started, and third-party providers started offering acquiring services and payment initiation services. As a result of our continuous engagement with the private sector, we realized that we further need to provide more space to the fintechs, and thus we started working on regulations for electronic money institutions. Now, electronic money institutions are those institutions who offer payment services. They don't accept deposits. They issue prepaid wallets or prepaid instruments to their customers, and then they are required by regulations to maintain certain capital and certain ensure certain safeguards to make sure that customer funds are protected. But the idea is to give them a sort of independence to go out and offer digital payment instruments to the industry and to customers. In the same year, we started offering, we issued the regulations for digital onboarding of merchants that enabled both EMIs and banks to remotely onboard small merchants and small dukandars and people who do business. Similarly, we also issued a standard for QR code. At that time, we mandated the use of EMV at that time. Immediately afterwards, in 2020, in January, we issued regulations for merchant discount rate and interchange fee, due to which now I showed you the slide in which the number of POS machines have started increasing, I think after a long period of where this remained stagnant. Then we had COVID last year, and because of COVID, there was this issue of how we are going to ensure the momentum of growth. So we reduced the pricing. In fact, we removed the pricing on IBFD, because of which we saw a big number of rise in the number of transactions. State Bank also issued Project Roshan digital account for overseas Pakistanis, and everybody knows about the success that we have here. And we also started work on launching the RAST payment system. I'll talk about RAST in a while. We also were working on improving the security, because we think that if people are to adopt and adopt digital payments, they need to have trust on the system. So ensuring the security and trust is very important. So during the past few years, we issued a number of regulations mandating the enforcement of certain standards, because of which now I think it's my own opinion, and we in State Bank believe that because of the implementation of those standards like PD Secure and EMV codes are standard on cards, and PCI DSS and PADSS, because of all these standards, we can now see that the number of e-commerce transactions are increasing in the country. A few words on the payments infrastructure. And like I said, that we started work on the RAST project. Now, RAST is Pakistan's instant payment system. The payment system, we also have real-time gross settlement system. And finally, in private sector, we now have a number of payment gateways who are offering services to the industry. OneLink being the largest one of them, offering interoperability of ATM switches, IBFT, bill payments, OneBill. And they have shown a lot of innovation during the past few years. Similarly, we have got NIFT for check clearing, and as well as NIFT is now live with their e-payment gateway. And I think they are going to play a very important role in e-commerce transactions. Similarly, VRG, Virtual Remittance Gateway, is a platform for USSD-based transactions, and they are working with branchless banking providers, implementing State Bank's Asan mobile account scheme and other services. Another recent entrant in this is the apps or Avanza Premier Payment System, which is a platform for merchant acquiring. 8 EMIs are now in various stages of launch in Pakistan, and we are also working on digital banking regulation. And all this is to improve the infrastructure in the country, payments infrastructure. Now, just to give you an idea of the EMIs on the right, you can see that right now we've got 2 EMIs, NayaPay and Finja, who are online. And there are some EMIs who have been granted in principal approval, and a few of them are in pilot approval stage. I think very soon we'll be seeing about 2-3 more EMIs getting commercial approval, launch permission from State Bank. Like I mentioned, on the PSO PSP, we now have a number of gateways who are live in Pakistan, and 1 or 2 are in pilot stage. Now, a little bit of information on RAST. Now, RAST is the faster payment systems of Pakistan. Like I said, I think late 80s and 90s, we saw the emergence of real-time gross settlement systems, which were systems that facilitated large value fund transfers. And State Bank also implemented its system in 2008. And the system is primarily, the objective of that system is financial stability, because we manage the systemic risk by allowing institutions to transfer their large value transactions using RTGS. Now, RAST can be thought of as a faster payment system, which is sort of a retail version of the RTGS. Now, this system is directly linked with RTGS of State Bank of Pakistan. And a lot of work, went into designing the specificities of the system. We studied a number of other systems in the world, including UK's faster payments and some other countries. We also looked at what was happening with India's UPI or Singapore's FAST. So the RAST specifications were designed after a lot of consultations with international experts and domestic players. And the system, despite COVID, we were able to adhere largely to our timelines, and the first use case of the system went live in January. Now, that use case is bulk payments. So companies, governments, they can actually send their payments through RAST, bulk payments like salaries and other payments, which can be processed by the system. Hopefully by the end of next month, we will be launching the P2P, person-to-person transfers features of RAST with a few banks. And that would enable customers to use their banks, service providers, apps, or internet banking portals, or even their counter services to send payments to each other, primarily using their mobile phone numbers. So the idea is that there is a directory in RAST that links mobile phone numbers to the account numbers, so that a customer can just, if you want to send me money, you can just give me your mobile number, and I can send it to you using RAST. The system is based on ISO 20022 or 2022. It's got its own API gateway. It's got its own alias directory. And next, it will have its own QR code. Next year, June, and in around June, we'll be launching the third and final use case, which is payment to merchant. And I think that will have the request to pay feature, so people can request payment using RAST from any entity. And that, I think, would be a big enabler for fintechs and other private sector players. This is just a recap of what I just said earlier. So this is what we are planning that our payments infrastructure ecosystem would look like in the country. So you can see that on the bottom, we have got PRISM, which is the real-time gross settlement system of Pakistan, providing large value fund transfer services. And on the top, we have got RAST, which is instant payment system. And both the systems are connected with each other in real time. So this will help banks and direct participants to move their liquidity from their accounts maintained in State Bank of Pakistan to RAST and conduct payments from there. On the left, you can see we've got issuers and acquirers. These are entities who provide issuing and acquiring services to banks and MFBs and EMIs and PSOs and PSPs. On the right, we've got private sector gateways, and we're working with them so that they can also be connected to RAST. And of course, on the bottom right, you can see we've got other entities like government departments and third-party fintechs. So all of them will work together to make sure that we've got full interoperability in the country. One of the questions that I usually get is what type of fintechs will have direct access to RAST and what will happen. So in that area, you have to, if you look at this diagram, you will see that direct participants are those who are state banks, regulated entities, and they've got current accounts with State Bank of Pakistan because they have to manage their liquidities. All third parties will have to come to RAST through their accounts held with commercial banks, and that's how they will access. Although they can send their payments directly, but their liquidity would be managed by the banks themselves. Some other new initiatives are in pipeline, like we are working on issuing an interoperable unified QR standard for retail payments. And then we are also working on the image-based digital clearing of checks with NIFT. And we are also working on open banking initiatives. And this open banking is really very important. This is the last slide, and I would like to emphasize on why and the role of auditors will be changing, like the role of regulators is changing. So by open banking or open finance, we mean that third-party non-regulated entities can access data and certain services on behalf of their customers from their banks or financial institutions. So if I give a third-party fintech the right to access certain information or certain services from my bank, so they can request those services. Now, it's very important for the auditors and other professionals to make sure that this access is happening securely. Usually it happens through secure APIs, and that there are provisions for ensuring that misuse doesn't happen. There are provisions to ensure that framework is in place to ensure that customer disputes are handled in time and efficiently, and also to ensure that undue liabilities don't arise, and if there are liabilities, how those liabilities are settled. So that's one area which is very important, and I would request and urge the participants, especially the students, to look at what's happening around the world in open finance. We are also going the same routes. You'll have to make sure that your services to your customers, banks and other financial institutions, have provisions for auditing their systems. Similarly, we are with the card-based transactions are going to be there, but the online fund transfer services are going to be very important. With RAST and with online payment gateways, you must have sensed that online payment transfers are going to be very important. So again, I would request that your customers, corporates, you have to work with them to make sure, create awareness that they now access and have access to services, digital onboarding services from banks and other players. Also, you have to focus on how the role of non-banks in the financial system is changing. Similarly, we are working with government digitization, customer digitization, both in government and private sector. So maybe there'll be a lot of requirement for a trained HR who is able to look at and audit their systems. And finally, of course, cybersecurity and fraud is the main. I think it's one of the most important concerns of State Bank of Pakistan. So we have to make sure that we have got necessary standards in place, we've got necessary controls in place. Access control is going to be very important. For example, in case of open finance, you have to look at what protocols are there to ensure that misuse doesn't happen. So all these things would be very important for auditors as well. So that's all from my side. Thank you very much. Over to you, Halim.
Thank you so much, and Sohail Jawad Saab, really appreciate you being so generous with your time and outlining all the great initiative that State Bank has been doing. Our next speaker is Rachel Freeman. She is the Chief Growth Officer of Time. Time is a technology and solutions firm powering Time Bank, the first digital bank in South Africa with now 3.8 million customers, and GoTime, a newly licensed bank in Philippines. Rachel Freeman is an experienced and internationally recognized financial expert, particularly in the areas of financial inclusion and innovative financial technologies. It is our pleasure to have her here. Over to you, Rachel.
Hi, and thank you so much, Alima. And I think congratulations are in order for you because I think you just did a capital raise that was announced today for women entrepreneurs. So that's really fantastic. All right, so I had think someone was going to bring up the slides. Yep. Thank you, Ambreen. All right, so that my name is Rachel Freeman and I lead growth at Time. Time is a digital banking group and we specialize in emerging markets. So what I'm going to do is talk to you a little bit about the kind of digital banking. First, give you a little bit of an overview as to what is Time so that what we then talk about is clear and makes sense for the discussion, but really go into kind of some of the challenges in digital banking and some of the things that everyone needs to think about. I know that there are a number of neobanks that have opened in Pakistan, as well as I think that there's legislation that's under discussion at the State Bank of Pakistan on a digital bank license. So this is some of the things that the whole group and this association can think about as that legislation, as that regulation comes forward, if it does, and what is a digital bank license. So first, Time actually started as a fintech in South Africa and then was purchased by Commonwealth Bank of Australia, moved to Asia, then was divested from Commonwealth Bank of Australia and is in its now as a group that has digital banks. So our first bank in South Africa is called Time Bank. It's a fully licensed commercial bank. It's not a digital bank license. And it's not a fintech that goes on the rails of another institution. We actually have our own license there. And that is what we consider when we say our first deployment. We have since secured our second license in the Philippines that will be called GoTime, and we'll be using the same model as what we have in South Africa. So we have about 200 people working for us in South Africa to run the bank. And we have now about 150 people in Vietnam, and Vietnam is where all of our coders and developers are. Our bank is completely on the cloud, and so we can deploy into almost any country using the team that's in Vietnam. And that's been something that's quite interesting, that developers and coders in Vietnam can actually run a bank in South Africa. We were the first bank in South Africa to go on the cloud. And we had a very lengthy discussion with the regulator as then the first bank that was approved with a new license in 20 years and the first bank to go on the cloud. And we have since engaged with many regulators over usage of cloud, digital banking, and how we think you can actually use technology to serve the underserved. We are not a bank for developed markets. We are very much a bank and a group that focuses on emerging markets and thinking about the underserved. And Halima, you'll be very happy to know this. We have 54% of our customers are women, and women are actually growing much faster than men, and they use the account in very interesting ways. So I also want to promote the idea of doing disaggregated data for gender from the beginning, because there are different segments that you can think about and different ways that men and women use the accounts. And that's a really strong recommendation that we always give when people are thinking about fintech, is that similar to banking, you can think about the women's market as well as the broader market. And that can be a very interesting sector. So here's just a snapshot of Time Bank. We have 3.8 million customers. We will reach 4 million customers by the end of the year, probably by November 1st. We launched the bank in February of 2019. So we consider that we're the fastest growing digital bank that's standalone, meaning we're not connected to a messaging service like a CalBank in Korea. And we have about 56% are active in the last month. So we consider active if you've used or done a transaction over the last month. And so that's quite high as well for a digital bank. We also are 30% cheaper than the most affordable next bank in South Africa. And that shows the power of what working on the cloud and digital can bring. But we actually have a very interesting model that I go into and why we do this. But we actually have kiosks that do account opening in grocery stores across South Africa. So we have, while we are talking about digital, we actually consider that it's important to be high tech and have touch. The touch is very important. It just doesn't have to be a branch or the way that touch is done right now. There are ways to actually have what we consider more of a physical and digital, or some people say phygital model for digital financial services, that we have very strong values and beliefs at time, including the fact that we believe that the people like people. And so what we do is we try to digitize and automate all the things that should be digitized or automated, but actually then continue to have a human touch in everything that we do. So that's quite an interesting way to think about digital financial services. And we think this is particularly important for emerging markets. So we can go to the next slide. All right. So when people pick up the newspaper, or pick up and look at their phone and read about Revolut and some of the large big digital banks, N26, that are happening in Europe, then it looks like the whole world is moving to digital banking. And then from that, you have many new digital banks, about 8 in Hong Kong. There are new digital bank licenses that have come out in the Philippines. There's been an auction for those licenses in Malaysia. There's a sense that everybody's moving to digital banking. But actually, what we were here to say is that similar to other banking, banking is about trust. And there's some things that aren't going to change just because you go digital. So it's still quite hard to manufacture that first interaction. So while there are apps that you can download for going on and starting to do digital financial services, our belief is that most people don't wake up in the morning and think, today I want to open a new bank account. And they're going and then go and start downloading apps and just trying them. Most people need to have some kind of interaction or some kind of thing that happens in order to make them want to actually open a new bank account. And the second with this is that there's a lot of advertising that still happens, that you see a lot of advertising, digital advertising that goes on for digital banks or for fintechs, and people are getting blind to those. So really what the best mechanism is to do more customer education to drive long-term adoption, but that's more challenging to do. And so a number of digital banks have very high marketing budgets, but actually are getting many customers, but not many active customers. So one of the challenges when you're thinking about digital banking is how can you manufacture that first interaction to make it very positive and easy to use? The second is that banking is still about trust, and it's very important to build that, but that takes time. So for example, in Hong Kong, there are many new digital banks, and one is called Mox. And a lot of people open the Mox accounts, but what they would do is keep their main bank account at HSBC or Standard Chartered, and they'd move money over to Mox in about $1,000 US increments and then spend there. And then, so they weren't actually using the bank for anything more than just a wallet. So this is because the trust element is so deep, and it really is quite challenging to build trust in a new bank. The next piece is that, again, it isn't just acquiring customers, it's about active customers. So once let's say that you create a digital bank or create a fintech and you have an app, someone downloads the app, then they actually have to use it. So how are you going to get them to move from just downloading the app, which is, first of all, a big challenge, to actually using that? And what we found is that education and knowing how to use the app was more important than just having the basic brand awareness. But again, how do you create that type of education? And then the next one is that there is an assumption that just because someone has a smartphone, that they actually know how to use it and are going to be able to move to digital banking. So what our experience is that people actually find it quite intimidating to onboard and there's a number of different kind of digital banks and fintech apps around the world where you download an app and then they're supposed to scan your selfie, scan your ID, and do different things. And people are moving the phones around to make that happen. And that can be quite challenging. And the second thing is that there's an assumption that just because people use like Instagram, WhatsApp, Facebook, that they automatically are very digitally literate. But the reality is that most people actually don't use the smartphone for all that they have, and they're not going to take that next step unless there's a lot of education or that they really understand what are the products and services and how to make that happen. So again, it can be challenging to get people to move from thinking about digital banking to actually using it. And then the next thing is that, and we call this the kind of young people in London issue, because there are so many digital banks in the UK, and they've attracted younger banked customers to join them, and they're using them, but that's quite a small segment. And the reality is that to become profitable as a digital bank, you're going to have to be mass market. You're going to have a large number of customers. You cannot become a profitable bank just banking the millennials or just a small segment. But then you get into people who are already banked, really want a number of different products. If you build a number of products, that can be quite expensive and also to make it a challenge for profitability. So again, this is a challenge for digital banking. How do you meet the segment that you want? How do you make sure it's profitable? And how do you make sure you're not just building for many, many use cases? In traditional retail banks, there are a number of different segments. In fact, every product's been segmented to a very small grouping of for use cases. But in digital banks, you really have to have a few products and make them work for a lot of segments, a number of different segments. And this is the challenges which we consider in digital banking that are both for emerging markets as well as developed markets. Even in developed markets, there are a number of people that are just not going to download an app and start using it, that some of the same issues around literacy can be, whether it's developing markets or developed markets. But there are a number of different challenges that are very specific to emerging markets. And the first is the digitization of cash. So right now in most emerging markets, cash is still used for 80% of transactions. And in fact, even with all the discussion of Amazon and how well it's doing and COVID and how that's driven people to be more digital, in the US, you still have cash is for about 65% of all transactions are still in cash in the US. So there's still a lot of cash out there. And you know, as cash is maybe expensive for governments because they have to print it and maintain the cash. And there's a lot of reasons why to go digital. But the reality is that people can hold cash. They know what it looks like. They've been using it for a long time, and it is very, for an individual or a customer, there's no friction with using cash or very little friction. So getting people to move over to digital is a challenge in emerging markets. And one of the key things that we decided is that if people believe that they can very quickly turn their cash digital and then get it back into cash whenever they want, make that very easy, it's going to allow people to have the comfort to actually move into digital. But if it is digital money that can only be spent digitally, can only be used digitally, and there's no ability to convert between cash and back, then that is a big kind of deterrent for digital banking in emerging markets. The next thing in emerging markets, and this is the same, but I think it's more important in emerging markets, is that you'll be used as a digital bank or as a fintech if you're easy to find and you can engage people where they are. So you're not going to be making people go to a specific location. If you engage them where people normally go to, and when we say where they shop, they eat, they play, it's going to be a lot easier to actually engage with them, get that first interaction, and then get them to start to build the trust. The other thing is that as much as people talk about using phones for cash and for payments, that using cards is very good. I mean, people have been using cards a long time. It's a very known technology, and cards also are a good marketing piece. So as much as people, and we have been advocating for digital financial services, we also think that the card is around to stay for a while, and that any kind of product should be engaged, or any segment should include still a card. The next one is, and we just heard a presentation from the State Bank of Pakistan actually about payments and all of the interesting, exciting things that are happening in Pakistan on payments. And we are really excited to see this. This is a great next step for the country. However, if you're going to be providing more complex products, then payments you have to do, it has to be part of every segment. But actually payments become very quickly more like a commodity. You have to, or hygiene factor, you need to have it, but it's not actually going to drive profitability and move the bank that much further. So it's one of those things that is important to have, but you need to have other things that are in the product mix, not just the payments. Though, again, if you're doing too many products, it also becomes very costly. And so it's figuring out what are the key products you want to have and then just doing those really well. I talked about this a little bit before in developed markets, but in emerging markets, customers are really looking for someone to walk the path with them. So we say that there's a Sufi saying that we like to say that you can only walk from where you stand. And we really believe that people can only start to go digital from where they are right now. You cannot expect them to overnight become digital just because they've heard about it. That institutions will have to walk that journey with them. And that's one of the most important things that we think in emerging markets or countries that are moving just into digital now, is that engaging with your customers where they are in their life right now and in their digital life is critical to making this work. And again, we actually believe that an ecosystem or embedded finance where you're building the finance into where people are naturally going already is very important for long-term traction. So if you take some of these challenges that presented itself in South Africa at time, we thought, how do we solve that? So first, we thought, how do we actually help people onboard and make it really easy? And that's how we built our kiosks. You can see a picture of the kiosk here. And we have new generations of kiosks that are coming out right now. So we place these kiosks into the grocery stores. So you walk into the grocery store and you can open an account in about 3 minutes in South Africa. You get a Visa debit card. It has your name in it. It's working. You can use it immediately. And then we have enabled all of the cash registers to do cash in, cash out. They're not agents, it's a tokenized anonymous system. So after you get your Visa debit card, that's your Time bank card, you go to the cash register and you put money in and you start to use the account immediately. And we have enabled the cash registers across two grocery stores, the chains, Boxer and Pick and Pay in South Africa. And this has enabled us to go out to all rural and very small villages. It's enabled us to meet customers where they go. We also, yes?
Investment apps, financial.
So so that we see this as one of the most important things that we did to enable that first interaction. And then we have station ambassadors right next to the kiosk. They don't help you onboard, but the ambassadors then help you download the app, show you how to use the app, and do all of that education. And those are people from the community. They can only be one taxi stop away, and they are there for education and for promotion. They don't enable things, but they're there to help you talk through how to do that. And that's how we have kind of the step first that we've done in terms of education channels and onboarding, and then the cash management. We then have enabled digital channels for everyone. Just because we are a digital bank doesn't mean that we don't still have USSD. Some of our customers want to work into USSD, and we do that. We then try to keep people using the account in the account. So you can buy bus tickets, airplane tickets, you can buy Spotify vouchers, you can buy Netflix, you can buy games, all of that you can do in the account. So we try to keep people in there using it. But if they want to, they can immediately go to the cash register, pull out their cash, and continue to work in cash. We are not making you stay in cash by just having the money in the account. That's what we have enabled with the cards. And we think that that's a really important aspect. So we have a number of interesting products. We have Goal Save, where you can state exactly what you want to save for and build toward that and have it in different buckets. We offer increasing interest rates. The longer you keep the money in the account, Then we continue to increase the interest rate to incentivize positive savings practices. We have just recently launched an earned wage product, and I think there's similar types of companies in Pakistan to that. And we start to sell a third party like insurance and other products from other institutions on through time. So while we manufacture some products, we do not manufacture all of our products. We've tried to be very selective in what we do and then have other institutions do that. So we also have one of, you can go to the next slide, which is about more time. So I just wanted to highlight more time because this discussion today is also about what's happening globally. And I would say that buy now, pay later is a huge international phenomena. Well, you have Afterpay from Australia that is, making a huge dent into taking people away from credit cards, Aspire, but there seems to be buy now, pay later companies that are coming up in all countries. I believe Pakistan also has buy now, pay later. I'm just showing you, we have created more time, which is our buy now, pay later attached to the bank account. So it's a little different from Afterpay that doesn't attach to a bank account. We've attached to the bank account, and we actually have enabled this both for online commerce as well as in stores. And we're seeing more people using this in the actual stores. So this is one of the big things that's happening globally in fintech. Same with this idea of earned wage, where if you're paid once a month, then you can actually get your salary 2 weeks ahead of time and halfway through with a small fee. So that's another really interesting global product that's making a lot of headway. There's a number of different things that are happening globally in open banking, in terms of red tech, and then of course, I'm not going to cover this, but in the whole cryptocurrency area. So there's a lot of activity that's happening globally in fintech and on the consumer side, as well as starting to be on small SMEs and in micro entrepreneurs. A lot of these products are very interesting for Pakistan. We at Time have been looking closely at the market. I've actually been to Pakistan twice, not recently, pre-COVID, but really was taken with the country when I was there. And I know that digital banking could actually work really well and that the country is really ripe for this type of innovation. So I was very happy to be asked to present here today. And if anyone wants to get in touch with me at Time, we're always willing to share our story and any more advice or just help people think through challenges they may have while we're doing that. We believe that the world needs more types of digital banks. And if we can be helpful to anybody, we're always very excited to do that. So I thank you so much. I don't know if there are any questions, but it's been really kind of nice to be able to share our story. And we're really hoping, so I personally am hoping that I get to come to Pakistan, at least in the next several months, and to be able to participate in your digital banking journey.
Thank you so much, Rachel. And we would love to have you in Pakistan and learn from your insights as you built the bank that you did. Appreciate your time. Our next speaker is Kasif Shahid, one of the pioneers of financial technology solutions in Pakistan. Kasif currently heads Finja that he helped co-found. Finja is Pakistani fintech startup with a mission to transform how people relate to money and make payments. He has 25 plus years of multi-country experience in building, managing, and growing digital financial services, products, and businesses. Over to you, Kasif.
Thank you, Halima. Happy to be here, and big congratulations for raising a round. That's fabulous for you, fabulous for the ecosystem. Well done.
Appreciate it.
Okay, so I've got a few slides that I'd like to talk through. Hang on. How do I go to the next one? Okay, you're controlling the slides, so let's go to the first one. Yes, so I start talking about by mentioning a book that somebody big wrote called Andy Grove. Andy Grove was the CEO of Intel in the 90s. He's also affectionately known as one of the fathers of the Silicon Valley. And he came up with a concept which is called strategic inflection points, SIPs, he would call them. And what he said, and time has proved this, that anytime a industry or the world, when it goes through these strategic inflection points, everything changes. It's a time for great disruption and great dislocation. And if large incumbent players don't align themselves to the new world, they very quickly lose market share and sometimes disappear. And that's happened time and again. And why I talk about this book, Only the Paranoid Survive, is because it's become extremely relevant in today's time, which is the time of the global health crisis. So the global health crisis or pandemic is the ultimate black swan. And what it has done is that it's completely changed everything. And this is why Pakistan is becoming one of the most exciting markets for digital financial services and fintech. And if this black swan would have not arrived, it would have taken another 5 to 10 years for this level of excitement to come in. The question is why? And the answer is that, what the pandemic has done is that it has basically made small businesses and medium-sized and large businesses go out and realize that they cannot operate without digitizing their workflows, meaning that if you're a business today and if you don't collect money digitally and you don't pay your salaries digitally and payments to your vendor suppliers and partners and a bunch of other stuff, you would not be able to operate in the global health crisis. Also, it's important that you get digital credit into your system. Otherwise, the cushions that you have are hardly there. So the businesses all over the world and in Pakistan are screaming for these next level of services, which have become essential for them to survive. Now, what's happening on the business side is also happening on the consumer side. So the consumers are going out and screaming for these level of services themselves. So if you are an individual, you would want to get cash and physical payments and transactions out of your life, simply because if you don't, you're living a risky life for your loved ones. So on both sides, the businesses and the individuals are screaming for new level of services, and the banks are struggling to provide those services. And we can talk a bit longer on why the banks are failing, but they're failing because they're structured incorrectly. They're all vertically integrated structures where they are competing with each other, and these structures are unable to create the next level of innovation. Because these structures are unable to create the next level of innovation, and because of the void that has arrived through the demands of businesses and individuals, the banks are now forced to go out and partner with these new age companies, which are called fintechs. So the fintechs would then be the glue between the customers and the businesses to provide these services. The fintechs have actually gotten a speed pass to go work with the SMEs and the individuals to provide these services. And that's really exciting. Now, could we go to the next slide, please? So the next slide quickly shows you what has happened in the country, and what you could see, have a look in the middle. You would see that in 2008, we only had one investment locally, but 2020, there were 28 startups, which is the year of the pandemic, raised $66 million. But we've already raised over $250 million up to 60 startups in the first half of 2021. That is the impact, and it's just starting. And that is the impact that the pandemic has. On the left side, we are showing, because there's this great criticism that Pakistani market does not have exits. But on the left,
you could see some of the exits, Kareem with the Pakistan origin, then Food Panda, Easy Pesa, Daraz, these are all examples. And on the right, you see companies with super valuation, which is a reflection of the size of our market. And this is showing that, the Pakistani fintechs have really arrived. Please move on to the next one. Yeah, this is a slide that I've just put it here. This is something that Planet N does. Credit goes to Nadeem, and it's showing on a single slide the number of fintechs that are operating in the country, right? And they're increasing. So there are a bunch in all of the categories. But if you take a step back and understand the fintech and the bank relationship, it's understood through this Mark Twain quote, which is that, history doesn't repeat itself, but it usually rhymes. And, and if you were to step out and understand what happened when the iOS and Androids realized they were platforms, which was 2008, they went out and shifted the burden of innovation to the smaller guys, which then started to build the apps. And today we have millions of apps on the smartphones, and it's the apps that have created the new use cases, and it's the apps that have made the smartphone the most pervasive device in the history of humanity. But the apps were produced outside of the platforms. The apps were produced by smart people who all started to build apps, because 70% of the revenue started to go to people who are building apps, and 30% of the revenue was for the platforms. Now, this similar story, what the apps have done to the smartphones, is exactly what the fintechs are going to do to the banks, right? That's what I want you to remember. Now, now Finja, let's come to Finja, right? So what is Finja doing? Finja is a digital lending company that is operating in the 5th largest country in the world, which is very scarcely lent. So if you were to see here, there are only 3.6% SMEs that have been officially lent to in this country, meaning 5 million SMEs and only 180,000 loans. By the way, out of those 180,000 loans, 8 to 9% are already done by Finja, which should tell you that a small fintech like Finja has 8 or 10% of SME lending in one of the largest countries, to tell you how much potential is already remaining. Then we've got 56 million folks that get a salary in this country, and only 3% of them have officially taken a loan. The number is 80% in the US, for example. On the left, we are just showing you the transactions that Finja has done in this space. So we've got products that have done over 230 billion rupees of transactions. We've done more than 50,000 digital loans, etc. And all of these payments actually go out and double up for us as data that we score and lend. That's why I'm showing this slide. Please move on to the next one. Yeah. So this would explain to you the structure of how we are operating, and it would then shed light on how fintechs can go out and create value. So in the middle, we have this technology stack, which has a Finja score, and then Finja business, and a wallet. And through this technology stack, we've created supply and demand. So on the right side, we've got the demand, and the demand comes from the businesses and the consumers. So on the demand side, Finja is focused to go out and lend in the FMCG supply chain. And we lend to the distributors, the sub-distributors, and the mom and pop stores. And we do that by scoring the supplies that these businesses are scoring. And as we go out and score the supplies, which the other word for that would be the GMV of what those businesses are buying. And then we create credit for them through our AI and machine learning scores. And these businesses can go out and pay for the stock that they are buying. And this is how we are designed. So when we go out and work with businesses, we don't give them cash, but we go out and we create a score for them. And then we disperse credit to them that they can only use to buy supplies. Now in Pakistan, when these businesses go out and sell, they're still doing a lot of selling in cash, but what they're buying is all digital, and there's a track record for it. So, and that comes from the distributors and the FMCGs, and Finja uses that as a baseline to go out and score. And today we are operating in over 30 cities, and we work with thousands of these businesses. But when we work these businesses and give them credit, they go out and get to buy these supplies, because of which their profits and their sales increases. And because we've been doing this for a while, we can see the upside that these businesses are experiencing. And also we can see how the quality of credit. So the quality of credit is such that Finja has a 0.4% bad debt compared to 17 to 18% bad debt in some of the other businesses that the banks are doing in this segment. Now on the left is the supply side. And when Finja, and this is very interesting, and when Finja started to go out and lend, we were using our own equity, the millions of dollars that we've raised to build these portfolios. But now a lot of our portfolios have vintages, because these are 1 month loans mostly. And a lot of our users are in their 7th, 8th, 9th, and 10th cycles. And because of that, and because of the vintages, there are banks that have arrived. And now we've got multiple banking books under the NBFC that we've partnered with. In that sense, we have access to a lot of capital, almost unlimited capital, to the segments in which we operate, in which we've created a vintage. What that means is that the risk of lending is not entirely carried on our balance sheet anymore. It's distributed into our partners' books. And this is where Finja's multiple licenses come in and play. Also, I want to, please move on. Yeah, so, this is the same thing that we do for productive lending, we replicate on consumption lending. So on the top, we have all the data partners from where the data is coming in. On the left, we have supply. On the right, we have demand. And under there, we have the APIs and the use cases exposed. Because we have licenses, today, it puts us in an enviable position on 3 levels, which I want you to understand. The first level is that because the banks are going out and wanting to seek partnerships to fill the void, they want to work with fintechs that are licensed, because it's the early days of partnerships, and banks would feel secure partnering with fintechs which have licenses and similar regulations. The other play is that fintechs like Finja, which you've seen through the design, are actually platforms themselves, meaning that smaller, more nimble players without having the burden of regulation can come on top of Finja and then expose their services to the ecosystems that we are building. So that's the second play. The third play that needs to be understood is that because we've got these licenses, we have the ability now to expose the APIs of the use cases that we have to non-licensed players, and even players who are in the non-financial space. For example, the EMIs allow Finja to go out and expose APIs to a startup or a fintech that wants to create a consumer-facing wallet with their own brand, for example. Or if there's somebody that wants to receive an IBFT cash-in, or somebody who wants to use any of the services, those services could be given to non-players. So in this multi-dimensional way, the licensed fintechs at the early stage of the game are going to create digitization in 3 ways. A, I repeat, partner with the banks. B, go out and act like platforms themselves. And C, go out and expose their APIs so that non-licensed or non-financial organizations can operate as fintechs without the burden. We could move on. We could move this slide. We could move this slide as well. Let's move on to the next slide. Yeah. So, since our country is so large, just the FMCG supply chain, which is the fast mover consumer goods where the Unilever, P&G, Coke, Pepsi, then the distributors, sub-distributors, wholesalers, mobilizers, and the stores. All of this, we've got 2 million stores, we've got thousands and thousands of distributors, FMCGs, and there is opportunity to go out and give credit at all parts of this supply chain. You could lend to the Kiryanas, you could lend to the distributors, everybody else, and you could apply the same formula where you never give cash out, but you give people, the businesses, the money so that they could use supplies, right? But whatever, and this is where Finja wants to lead the play and make a difference, and we are already leading there. But, the real opportunity is the fact that, it's not just the FMCG is a supply chain, almost everything in a country is a supply chain. So we are an agri-based country, so agriculture is a supply chain, right? So the way to view agri supply chain is that the farmers are going out and they're buying inputs, from pesticides to khade to whatnot. And a play would be to go out and score what the farmer's yield has previously been, what he's been selling to the mill, and then coming in and allowing him credit so that he could buy, the pesticides and whatever else that he requires. And then once the yield comes, he can pay you back. The same thing can happen in auto parts. The same thing can happen in fashion, in furniture, in oil, in health, in the new age online commerce businesses, for example, right? So the online commerce businesses are beautiful because, there the sales are also digitized and so are the supplies. So, what the Finja belief is really that if you take a combination of technology and equitable credit to these businesses, then you will grow these businesses. And as these businesses grow, you grow as a consequence. Now, the new licenses allow Finja to operate like a bank because we really don't need a bank to go and score any segment in the country now. We can source a segment, we can score a segment, we can disperse money to a segment, we can collect money back, and then we can create a loan, and we don't need a bank. But the beauty is that when we go out and do this, we become enablers for the banks, right? Because we have licenses which are in a different orbit. So we don't compete with banks. So then what happens is that banks come in and they give their lending books to us. And then we share revenue with them, but we then become enablers of the bank. So this is a classic fintech play where you first go out and carve a way to operate independently, and you blaze, and then you show the results, and then instead of competing, you bring the banks along. But in the process, what you're doing is that you are unleashing digital credit in one of the largest countries of the world where minimal work has happened on credit. But you do it in such a way that your destiny does not rely on these large banks because they move slowly, yet you don't compete with them. That's really the Finja fintech model. I think I'm almost out of time, so I'll stop. If there are questions, happy to answer those.
Thank you so much for your time, Kasif. This was very, very insightful.
Okay, cool.
Now my colleague at Pakistan FinTech Association, Fawad Abdul Qadir, will be presenting the use cases. Fawad, other than being a core member of PFA, is also the head of digital financial services at NIFT. He's a digital payments and financial services professional with an overall experience of 16 plus years, with the focus of improving customer experience and creating convenience in the access of financial services and transactions. He has managed customer experience centers, created digital strategy, and developed products and services for the financial sector, including banks, PSO, PSPs, to increase transactional convenience and digitizing workforce. Over to you, Fawad.
Thank you so much, Halima, for that introduction. So I would like to give a demo of certain fintech use cases that are prevalent in Pakistan. So the idea over here is to showcase, of course, like Kasif showed, a lot of fintechs are there. There are more than 100 fintechs operating in Pakistan. So it's difficult to give a demonstration of all the fintechs. What we have done is carefully selected a few that we can showcase over here as a demo. The idea of this is to actually explain that when fintechs operate, they operate in a collaborative manner. Like Kasif said, it cannot be an individual entity doing on everything on its own. So the collaboration with the banks is important. The collaboration with the regulator is very important. The collaboration with the industry for which you are digitizing the use cases is very, very important. The first entity that I'm going to introduce over here is Kinu. Kinu has been the foremost and probably one of the first fintech startups that started to operate in Pakistan in 2016. Kinu started their operations with retail payments, with deploying POS machines over the merchants. Also, they have an online payment mechanism through Net Connect, which enables bank account payments and payments through wallets to different online merchants. They have a loyalty program for their customers, as well as Kinu has a digital wallet and is now in a pilot state as an electronic money institution. Kinu has been one of the most successful models out there in Pakistan, deploying over 10,000 point of sales machines over a retail network and have 50 plus e-commerce merchants live on their online network, that's NetConnect. The acquiring business, if we talk about their success, like I said, they have 10,000 plus POS machines, plus they power 6,500 brands with 9,100 merchant locations, over 114 cities, with a total volume processed of 200 plus billion. Now, this is a huge volume for a fintech to process. They were able to do it in partnership with Bank Al Habib, which was their partner bank in the early days when they started in 2016 and moving forward. Their per POS productivity is 1.3 million. What I would like to do from here is that I would like to show you a demo of, the earlier transactions that used to happen were usually transactions through the physical card being dipped or being swiped on a POS machine. Lately, with NFC there, they have been able to adopt that. So I'll run you through a Kinu transaction that happens on a retailer. So when a customer comes up and shows a card which is EMV compliant as per state bank regulations, now the merchant is able to accept that card, type in the amount, and just tap the card to charge it. And the customer enters their PIN code, which gives an authorization from the bank. Now, this transaction is the simplest of transactions that is happening for a while now. Firstly, it was happening through swipe and dip in the POS machine. Now it is just being done through a tap through the near field communication NFC technology, which has taken over and which is now available with the plastics. Now it is not only available with the plastics. This is now available in different gadgets that you get, because card is now virtualized. The card can be in your watch, which can be tapped and the transaction can go through. Similarly, the card could be in your mobile device, which would work similarly as this watch, and the NFC technology on the mobile device enables that transaction to go through. Now, these are enablements through different technological advancements in the market. And this is something which has resulted in volumes which are unprecedented. So let me just give you a figure that Kinu is only second to HBL being a very large bank in Pakistan. Kinu is second to them when it comes to volumes in processing point of sale transactions. So this is just a brief about one of the fintechs. And like I said in the beginning, it's another story of a collaboration between a startup, which started with an idea of digitizing retail transactions, going out there in the market and setting up a point of sales, and partnering with a regulated entity, which is which was a bank, and doing the settlements for them. So the collaboration worked. Similarly, another fintech, Halima has been moderating this session, is Uran, which is a newer fintech, but has touched upon a lot of lives because simply of its use case and its ideology. So Uran is a product for women by women. And the ideology is that in Pakistan, there is a lot of ballot committees happening, which happens locally in an informal sector and in an undocumented form. The industry represents around $5 billion market opportunity in Pakistan, and 41% of Pakistan's population uses these committees. Now, in this, women has a probability of using 1.3 times higher probability to save, for insurance, for credit in the ballot committees. And this enables them to have forced budgeting, access to liquidity, religiously and socially unacceptable. So the thing is, Uran has done some amazing work because this was a use case which was done in the physical world by people, mostly in cash, which they have successfully digitized. And in this digitization, they have enabled a complete documentation of these committees and creating convenience in it. Now, what I would like to do is I would like to show you. So you can go and set up a committee on Uran. The Uran team can help you set up a committee. And once that committee is set up, people can pay you from different means. And I'll again move on to a video which would show you how Uran actually works. Just give me a second while I set up the video. Okay, so as we all know, in the ballot committees, you have installments that you pay per month, and this is installment that has to be paid of 5,000 rupees, and this is the second of the installments that is being paid. As you open the Uran app, you can go down to pay. Now, once you click pay, you get different payment options through which you can make a payment. And you can make a payment through Easy Pesa, you can make a payment through Jazz Cash, you can make a payment through bank transfers. And so as you create, and what happens is, so this is something interesting that I would like to share over here. So in Pakistan, OneLink has been doing some amazing work where they have, again, a fintech, which has been operating for a while, a regulated entity, which is there, which does the ATM switching, more famous for ATM switching. But other than that, they do IBFT and they do bill payments. And through these bill payments, they have enabled multiple aggregators. And through those aggregators, you can create a payment ID. This ID is enables you to make a payment through any one of the aggregators and go into. So over here, what we have shown is that you can go into an EasyPesa app and go into that and select Hubble, which is the aggregator that enables Uran for these payments. Now, if I just name these, Hubble is another fintech, OneLink is enabling Hubble, Uran is being enabled by Hubble. So a lot of fintechs coming together in order to enable these payments. And this is the market that we are working in, because everybody is collaborating with everyone else to share their work, to share their enablement, so that everybody can create their own use case. Now, Uran has created the use case of digitizing the ballot committees, but it partners with multiple entities to capture the payment. So they just enter the consumer ID that was generated, and next they are able to pay. Now, just one last example of another fintech, which is enabling payments in Pakistan, which is another use case, which is very important. And the idea over here is that you digitize invoices for people to pay. Now, these could be invoices of retail payments. These could be invoices of educational payments. These could be invoices of any industry which needs to be paid. So every industry needs to have a payment mechanism. And Blink is another fintech which has recently started its operations, but has penetrated into the market to digitize different type of invoices which can be paid by their customers. These invoices can be digitized by integrating with the Blink platform, by an MIS which can be integrated, and the transaction is done. So they offer billing services through OneLink. They offer account-based payments through NEFT and apps. They provide real-time reconciliation portal with this. So another use case which is enabled by a fintech in collaboration with different regulated and unregulated entities. In this case, the payment schemes, the regulated payment gateways in Pakistan, that is NEFT, ePay and apps, and of course the billing services through OneLink. So I'll just run you through one last video, which shows how Blink operates. Okay, so this is the Blink portal, which gives their customers a view of their payments. The customer can upload an MIS or integrate with the platform. Once that is done, there is an invoice generated. That invoice could be searched on this platform. Once the invoice is received, like for instance, in this case, the invoice on the top of 65 rupees needs to be paid. This invoice could be paid through this link, which is sent to the customer, or directly from the portal. the customer can go on to proceed to pay, select direct account debit, and it gets routed to a payment gateway where they can actually select the bank, enter the account number and CNIC, which is taken to the bank. The bank issues a one-time password to its customer, and the payment is authorized once that one-time password is entered. Now, the instant message is returned to the platform from where the transaction was generated. And once the message is relayed, the platform is updated that the payment has been received. Now, this instantly marks this invoice paid. So if you search this invoice again, you'll find that this invoice has been paid. Now, the other method, now if you are not paying through this gateway, the other method is that the customer goes on to the internet banking portal of the bank that he is using. Over there, they can actually add Blink as a biller. Since this invoice is already paid, he would be adding another invoice because it says bill already paid. They would be adding another invoice which is not paid, and then they would be able to transfer funds in real time into this for this invoice. So this is another way of the customer making a payment through one bill of one link to make a payment of an invoice that needs to be paid. Now, again, like I said earlier, this comes as a collaboration of different payment gateways at the backend, which is Nifty Pay, apps, and OneLink. And of course, banks which offer their internet banking, which are connected to the billing service. And then, of course, the fintech itself, which is fronting this relationship in this case, which is Blink. So this is how fintechs work to digitize different use cases, which are very real in our environment, which are very real when it comes to payments in Pakistan, and digitize them and collaborate with different payment partners to convert those payments into reality. Now, one last slide I would like to share is the key considerations for a fintechs, right? So this is very important for us to understand. We can't just since fintechs are startups usually, a lot of fintechs have matured over time, but it is very important for fintechs to understand the regulatory and the legal environment of Pakistan. So they need to understand the tax laws, the corporate laws, the state bank regulations in order to make sure that they do not violate any sort of laws or regulations within the country. They have to make sure that they protect customer data. They conform with the customer protection data. If they require for approvals from the regulator, they seek those approvals. Now, one key role of Pakistan FinTech Association is to guide and to help fintechs and startups who are coming up, to actually coach them, to mentor them, because we have with us a lot of seasoned people. So Kinu is a member, OneLink is a member, NEFT is a member, people who have been operating, Finja is a member. So a lot of entities who have been operating in this industry for quite a while to actually be able to guide the new entrants into the market. So that's one of the key roles that Pakistan FinTech Association is playing in the market. Then secondly, what the fintechs need to do, as also touched upon earlier, is making sure that they look into the information security and cybersecurity threats and safeguard them and the regulated entities that are connected to them. by system hardening, by putting in adequate controls, by making sure they do adequate system testing and analysis in order to make sure that they secure the entire ecosystem. And of course, the operational controls. And this is something, as earlier said, the role of the auditors as well to make sure that all of these aspects are covered by fintechs working with different entities, as well as the financial experts who will be working as CFOs of these fintechs to make sure, or auditors in these fintechs to make sure that these areas are covered. So a robust operational control is very necessary so that best practices are implemented. So this is a brief demo of how fintechs operate. What are the different use cases out there in the market? Because of shortage of time, I was only able to show you just a glimpse of what has happened in Pakistan. The Kasif showed a detailed slide of different fintechs, and each fintechs brings in new value and different value to the market. And that's the beauty of this game that we are into. So thank you so much.
Thank you so much for our different use cases. This marks the end of all presentations. I would now like to invite Chairman of DAB, Rana Mohammed Usman Khan Sahab, for remarks. Rana Mohammed Usman Khan is a fellow member of Institute of Chartered Accountants of Pakistan and is a partner and a board member of Yusuf Adil Chartered Accountants based in Lahore, working with a variety of the firm's largest clients. He has served over 25 years in professional for accountancy firms in Pakistan and has extensive experience of handling a diversified portfolio of clients, both multinational and local organizations in public and private sector. He has diversified experience of leading assignments in the fields of audit, tax compliance, and advisory services, due diligence, valuation, system design and review, etc. He has also served as head of accounts function of one of the largest listed companies in Pakistan in the telecom sector. Over to you, Rana Mohammed Usman Khan Sahab.
Thank you very much, Halima. Thanks a lot for this detailed introduction. And at this critical point in time, and we have, mashallah, spent 2 hours on this webinar, very informative webinar. I would formally welcome Mr. Khartaj. I think I can't see him now, he has left, but he has been very kind to spare time for his welcome address and opening of this webinar. Sohail, Javed Saab, Rachel, Kasif, Fawad, and Halima yourself for moderating all this. It has been a great event and a very informative session for all of our participants. Really, we are pleased to know that the role being played by the regulators, they are providing great support to this, to the development of this fintech. Definitely, what has been shared by Mr. Sohail, I can see a lot has been done. Regulatory environment, of course, is ready, facilitating these fintechs to operate in Pakistan and grow. And with that, definitely we are expecting a high growth in that. It has also been great to have an insight of international developments. Thank you very much, Rachel, for sharing all this and the challenges of definitely developing societies and economies. And I'm sure that our fintech players and the regulators, they'll be taking care of all these challenges. Kasif's sharing of growth was also amazing, I would say. The Pakistani fintech ecosystem is having in these days. And looking at the numbers, I would say the numbers are eye-opening. And definitely the growth, high growth is expected with these old technologies. And we hope that FinJA and Pakistan FinTech Association will keep on playing their role. Fawad's demos were also amazing. I would say a lot of new knowledge for me and for all of us. I mean, how these fintechs are operating and they are supporting this digitalization or digital banking and the transactions we are having. Technologies, of course, they are greatly impacting the businesses, business environments, and of course, all professionals like us. I mean, we accountants, we are into businesses as partners of our clients, maybe in their controlling systems or being auditors, as a lot has been said, that there are, big challenges for the auditors to audit in these environments and to make sure that these environments and controls are properly working. So, what we can do is to upskill our members to know all these technologies, to have some good awareness of the environments which are being changed. We are putting our efforts through DAP to upskill our members on these areas. A lot has been done. We have organized number of webinars and events. One hands-on course of long duration has also been launched on data analytics. And we hope that the next hands-on course is going to be on FinTech. And for that, Halima, Fawad, Kasif, we'll be looking forward toward your support and cooperation to have that long duration course for our members. Once again, we are thankful. I will not take much of your time, but definitely I need to thank you all. Many thanks to the Pakistan FinTech Association for their support, all-out support to organize this event. All the presenters, Rachel all the way from South Africa, and definitely other presenters, those who have spared valuable time to prepare their presentations and make their presentations. It has been a great event. I'm sure that it has been a great learning for our members as well. And special thanks to the members who have joined in, who have spared time, who are still with us. And definitely we look forward to have a lot more of these types so that our members' skill sets are definitely enhanced and we are able to handle all these challenges going ahead with the technologies impacting our business and practices. So with this, I'll close my closing remarks and thank you once again, and Allah Hafiz. Back to Halima.
Thank you, Rana Muhammad Usman Khan Saab. I appreciate all of you taking our time for us today. Thank you so much, all the speakers with great presentations, and Allah Hafiz.
Thank you very much, and Allah Hafiz to all.